VA loan versus conventional loans, which one saves you more? If you qualify for a VA loan, you've probably asked yourself this question: should I use it, or should I just go with a conventional loan instead? A lot of people assume the VA loan is always the better deal. Others think conventional more flexibility. The truth is, it depends on your situation. So in this video, I'm going to break down the key differences between VA and conventional loans, show you where the savings really come from, and help you figure out which option makes more sense for you. So let's start with the basics. A VA loan is a benefit for eligible veterans, active duty service members, and some surviving spouses. A conventional loan is available to the general public and doesn't require any military service. Now, let's look at how they compare in 5 key areas. 1, down payment. Number 2, mortgage insurance. 3, interest rates, closing costs, and finally, flexibility and long-term strategy. All right, number 1, down payment. This one's huge. VA loans don't require down payment at all in most cases. That means you can finance 100% of the home's value. Conventional loans, they usually require at least 3 to 5% down, and more often than not, you want to avoid that mortgage insurance. So that's typically about 20% or more. So right off the bat, VA helps you keep more cash in your pocket. All right, number 2, mortgage insurance. Here's where a lot of people get tripped up. Okay, conventional loans require private mortgage insurance, which is called PMI, if you put down less than 20%. This adds to your monthly payment and can stick around for years unless you refinance or pay that down until you get that 20% equity, okay? With VA loans, there's no PMI ever, period. So big savings there. Instead, there's a VA funding fee that's usually added to your loan amount. It's a one-time cost, and in many cases, it's still less expensive than years and years of PMI on a conventional loan. Plus, some veterans are exempt from the funding fee entirely. All right, number 3, interest rates. VA loans typically come with lower interest rates than conventional loans. That's because they're backed by the US government and they are considered a lower risk to lenders. Even a small difference in your rate can save you tens of thousands of dollars over the life of the loan. So if the rate is even 0.5% lower with VA, that can mean real monthly savings over the long term. Number 4, closing costs and seller contributions. With a VA loan, sellers can cover a portion of your closing costs and sometimes even buy down your interest rate. That gives you more negotiation power when structuring your offer. Conventional loans also allow the seller contributions, but the limits are tighter depending on your down payment amount, whether that's 3, 5, or 20%, okay? So in a competitive market, this flexibility can make a real difference in how much you bring to the table at closing, all right? And finally, number 5, here we go, long-term flexibility. This is where a little bit more options, okay? With a conventional loan, you don't pay a funding fee, and there are fewer restrictions if you want to use a home as a rental property down the road, which a lot of people do. In fact, that's how I did my first rental property as my first primary, turn it to an investment, all right? The key is the VA loans require that you live in the home as your primary residence, at least initially. And if you plan to use your VA benefit again in the future, you need to manage your entitlement carefully. So if your long-term plan is to buy and hold multiple properties, it's worth looking at how your first purchase fits into that strategy. Number 6, which one saves you more? In most cases, if you're eligible for a VA loan and if you plan to live in the home, that's the better deal, and let me tell you why. All right, here's why. No down payment, no monthly PMI, there's lower interest rates, and there's more flexibility when it comes to the seller's contributions. And it gives you the ability to get into a home with less cash out of your pocket. But there are some exceptions. If you're putting down a large amount of money, or if you're buying a second home or investment property, a conventional loan may be the better fit for you at that point. That's why it's so important to run the actual numbers, not just guess. So if you're eligible for a VA loan, it's one of the most powerful tools available to you as a home buyer these days. But like any tool, it works best when you understand how to use it. If you're trying to decide between a VA and a conventional, just reach out. I'll run a side-by-side comparison with your actual numbers so you can see which option saves you more. Thanks for watching, and more importantly, thank you for your service.